Okay, hey everyone. Today we're going to be talking about types of option strategies and what beginners need to know. So today we'll be talking about what's day trading slash intraday, what's swinging, and what's a leap. So for the disclaimer, I am not a financial advisor. This is in no way financial or trading advice. I am simply sharing option trading strategies that I use and have been successful with in the stock market. This presentation is for educational purposes only. There are significant financial risks involved with trading, and I'm not responsible for your losses in the market should you decide to utilize the information and or strategies discussed within this presentation. By choosing to proceed, you are acknowledging your understanding of this disclaimer. So, what's day trading slash intraday? Day trading is simply buying and selling in the same day. Intraday means within the day, as well as I know a lot of people trade on Robinhood, so they're often seeing call outs and stuff like that. And they're like, how can you get around day trading? Well, not around day trading, around the pattern day trader, because a lot of people get marked as a pattern day trader on Robinhood because they don't know that that exists or sometimes they forget. But a pattern day trader is a regulation designated to traders who execute four or more day trades over a 5 day period in a margin account. And people would be like, okay, I have a cash account with Robinhood, but you technically don't have a real cash account because they give you instant deposits. So that's technically margin. So to get around that, you would need to, you can get a cash account with Webull or with Thinkorswim, TD Ameritrade, and there's others out there, but those are the main two that we recommend. All right, so day trading slash intraday strategy, scalping. A lot of times you will see people talking about scalping. That's hopping in and out of trades for small profits, usually done on the 1, 2, 3, or 5 minute charts. Also, range trading, and that's trading the range of either support and resistance or the high and low of the pre market, as well as momentum trading, which is trading the breakout movers of the day, whether it be because of news, beating earnings. A lot of times people will use scanners to find this. They'll use the scanners in Thinkorswim or they'll use Flow Algo or though anything that scans the market so you can find those momentum type trading opportunities. So, what's swing trading and strategies for it? Swing trading is buying and holding an option contract until the next day or for several weeks to months. Now, a lot of times you will see that Chris refers to swing trading for buying stocks, but technically, swing trading also with options, it's just like I said, holding it till the next day. So, if you bought a contract on Monday and you held it to Tuesday, that's a swing trade. And that's why you also get around the day trading because that's not considered a day trade. So anything that's not a day trade is technically a swing trade or it's a leap. And the strategies, oftentimes people use MACD, RSI to swing trade. They'll wait till they see both the indicators line up as well as an uptrend, and then they will go ahead and hop in that trade, as well as using the 50 MMA crossing the 200 MA, which is often referred to as the golden cross, as well as using news and unusual option flow, which usually is on Flow Algo. And I think can't remember the website for sure, but I think Quant Data or something like that also has option flow, or Cheddar. I think Cheddar might have option flow. But basically, sometimes you will see that somebody bought $1 million on a 716 expiration $6 call for whatever company. If they put that much on it and that far out at that strike price, it's like, okay, it's going to either get there or get way above that. So I might want to look at that stock and see, like, okay, what's going on there? Is there some news coming to the market? Is there a rumor? Let me check that out and possibly play that as well. You could also range trade by using the support and resistance of a large time frame like the daily and weekly to swing, as well as you can use momentum trading to swing into the next day. Oftentimes, like before, whenever you saw vaccine news, especially if it was at the end of the day, you might see Moderna, mRNA. I always get the name wrong. You'll see it starts to spike up, and then the next day it's still running too. So oftentimes to catch the momentum, they'll swing it to the next day, the full momentum. They'll buy in power hour, which is the last hour of the market, and then they'll swing it into the next day. What's a leap? A leap is a long-term equity anticipation securities that are usually 1 year plus option contracts. So a leap is usually like a 1 year out option contract. And often the strategy used with it, as far as the one I use with it, and as far as what I've heard, is basically most people use the rolling forward strategy with leaps, as well as they use analyst price targets. So a price target is when an analyst makes a price target, it's basically set from a year from now. It doesn't mean that whenever they set their price target that it's going to be the next week that it happens, the next month. It's usually a year that they're giving themselves for that price target that the analyst picks, as well as a long-term trend or the company fundamentals. That'll be why somebody might buy a leap. Like if somebody's anticipating, I think like last year, somebody bought like a leap contract, a 1 year contract for Tesla and made like over $1 million because they saw Tesla basically being stronger and higher than what it was when they bought that contract. When they initially bought it, they said, okay, I'm buying this contract because I think Tesla's going to be at this point a year from now. And they obviously hit on it. All right. Also, what's quad witching? Because quad witching is coming up. Quad witching is actually going to be March 19th. I believe it's the third Friday of, yeah, March 19th. So quadruple witching refers to a day on which stocks index futures, stocks stock index options, stock options, and single stock futures expire simultaneously. While stock option contracts and index options expire on the third Friday of every month, those are your monthly contracts usually. All four asset classes expire simultaneously on the third Friday of March, June, September, and December. So those are your quad witching months, basically. Um, because oftentimes you'll see that sometimes that quad witching starts before the actual day. A lot of times the smart money, the institutions, they're going ahead and they're moving their money around, especially when they're thinking it's going to be a sector rotation. So they go ahead and start moving their money around, and you start to see that stocks that they held high positions in is starting to, that stock is starting to dip and stuff. That's because the smart money, the institutions are moving their money around. So that's something to always be aware of, as well as the fact that every every month on the third Friday, basically option option contracts and index options expire. So keep that in mind because sometimes you'll also see like a dip around that time. Also, what do I do to keep my trading psychology in check? I use aromatherapy. I'm actually using one of the fragrances right now, but to go over aromatherapy real quick, the three fragrances that I use: lavender, this essential oil has common properties that help control emotional stress. Lemon, this scent promotes concentration and has calming and clarifying properties that are helpful when you're feeling angry, anxious, or run down. So definitely that lemon would definitely help. I used to definitely when I'm taking a loss or things are not going the way I anticipated it to. I use lemon, and right now I'm using rosemary. This is a perfect Monday morning pick me up. In addition to improving memory memory retention, rosemary has stimulating properties that fight physical exhaustion, headaches, and mental fatigue. And oftentimes, looking at charts and reading companies' fundamentals all the time, that'll give you mental fatigue. So I often always have rosemary on, and then every now and then I switch to like lemon or lavender, as well as take a break. If I have a big loss, I take a couple of days off and study, see where I went wrong, if I actually went wrong, or was it something unexpected that happened with the market. I like to make sure because I know a lot of times we often lose confidence in our strategy, but sometimes it's just little things you need to tweak, and it's also some things that's just out of your hands that will affect the market and bring it down and make you end up being wrong in your anticipation. And if I have a big win, I take a day off to not get cocky. I think sometimes when we hit big, we think we can just go all in and those type of things, which often lead to you losing um and giving that money you just won back. Also, my hobbies, I do calisthenics and play basketball, so my life doesn't just revolve around trading and wearing my mind down, and that's a big thing. You want to often try to do things that has nothing to do with trading. That way you can kind of have a balance and that you're not just wearing your mind down, and you start to get, mental fatigue, as well as you start to um, go on like the emotional roller coaster. So it kind of helps you balance everything and stay in the right space for trading. So that's it.
And so what happens is you have your major securities that all expire at the same time. And Ray, can you guys hear me? I just don't want to.
Yeah, I can hear you.
Okay, so your securities are going to, or the securities are going to all expire at the same exact time. So what ends up happening is a lot of retail traders, they will begin to exit out of their positions at a very volatile manner, which ultimately causes, the market in a sense to just go red. It's not 100% every single time. It doesn't happen every single time, but you never know. So by those securities expiring at the same time on the same expiration date, again, it affects the market and causes people to go into a panic mode. So this happens 4 times a year, and it's getting ready to happen in March, the third Friday in March. And it's supposed to be the last hour of the day, but you might even feel the effects of it starting next week. And so that's why a lot of people say, I'm not, for example, I don't plan on trading, or I may not trade as heavy for the first 3 to 4 weeks, for the next 3 to 4 weeks, because I do know there was a time when I first got into the market where I heard about what quad witching was. And I thought that, okay, well, I'm really good at trading. I really know technicals and I really know how to do fundamentals. I'll be fine. Well, that's not necessarily the case, because during quad witching, I literally lost $4,000 in one day. Does that answer your question? And so, and when I say the securities expiring, I mean the index futures, the stock index options, the stock options, single stock futures. These will all expire simultaneously. And so that's why it affects the market the way that it does. So March, June, September, and December, the third Friday is going to be quad witching.
Yep. So March 19th, as well as every month, monthly options expire. So every month, the third Friday. That's why sometimes you see moves or you see a little bit of a dip. They also expire every month as far as options. All right. Does that answer your phone, D's iPhone? Answer your question.
Yes, it does.
All right. Ish, you can go ahead and ask your question.
Hey, cool. Hi, thanks for hosting the class. I wanted to ask a question about how to best choose expiration, and also how to deal with, you said that going farther out gives you a better advantage because you have more time. But I've had some plays where like going farther out hasn't worked in my best interest, and like the play hasn't gone the way I'd hoped, and the stock price was like going lower or just going sideways and consolidating. So when stock consolidates, it doesn't also help your stock option if you have a call. So I want to ask how to best choose an expiration date and go off from that.
So you would choose your expiration date based off of what time frame you're seeing something on. I have a breakdown of that in market facts and resources, but it's based off the time frame that you're using. So if you're using like the daily, you usually want to buy something that expires maybe like 2 to 4 weeks out. It just depends. Because you got to take into account like how much does that stock move and like where you expecting it to go to. So if it's only moving $3 a month, but you're anticipating a $6 move, then you would need to get at least 2 month out expiration or 2.5 month out expiration to give yourself time, because the more time you can buy, the better. I mean, obviously, it doesn't always work out in your favor because there's no guarantee with options. Everything is always very risky. I mean, nobody knows when the stock is going to move. I mean, we're just basically making educated guesses or whatnot. But typically, when you have more time on your side, that helps. And oftentimes, you will see a stock consolidate before it either goes to the upside or it goes to the downside. Those, like, there are four major phases of the market and how it moves. So one of them is accumulation, then it's markup, then it's distribution, then markdown. So that's why knowing the four phases of the market is important. And so that whenever you are picking your trade, you're making sure you're not buying something that is in a consolidation, or if it is in a consolidation, make sure you're playing like the support to resistance. So it'll be moving in a channel. So once you understand what the lower channel is, which would basically be the support, and what the upper channel is, which usually is resistance, you can kind of wait till it bounces off support, and you could possibly play the move between support and resistance.
I have a really cool trick for picking contracts, and I will repost it. I've put it in the community before, but we'll repost it. So what you can actually do is, if you go to a chart, you would want to look at how a stock moves over a given period. Like to do is, I like to see how much a stock has moved on an annual basis. Once I see how much the stock has moved on an annual basis, let's just say that's 6 months out. If I see that the stock moves, let's say $2 a month, I'm going to multiply that 2 by the amount of months that I want to trade. And then that's going to give me a range for picking an out the money contract. So that's going to be obviously $12. So if the stock is currently at, let's say, I don't know, $18, then I know 6 months from now, I'm probably going to be looking at a $30 strike price. Hopefully I did that math right. But anyways, if I see that the stock is currently, I'll put it like this. If I see the stock is currently at $14 rather, and I say I'm going to go 6 months out, that's going to be $30 for me. So I think I didn't say that the first time. So anyways, now I know that my out the money strike price needs to be $30. I may want to average down just for safety and choose maybe the 25. I'm obviously going to be looking at the volume and the open interest to make sure that it's there, but that's a really cool trick. You also want to pick, you want to enter your trade, because I heard you say that it goes against you. You want to enter your trade as closest to a support level as you possibly can when you're doing calls, or a resistance level when you're doing puts. That way you have a higher chance to capitalize on the entire move, but you are not chasing, in a sense. You're not chasing. You're checking your RSIs, you're doing those things, but that will definitely help you with picking your strike price. So in essence, look and see how much the stock can move. Also, I didn't say this either. Look and see how much the stock can move, but also look to see how long it takes that stock to make that move. And if you can keep those two things in mind, you're golden. You know, you want to study that stock intimately and see what it can actually do. Did that help you?
Yeah, it did. I think I jumped the gun a little bit on some SPACs. I thought like the moves after the merger might happen a little sooner, and I got caught in that. But I'll definitely take those into account and try to apply that in the future. Thank you.
No problem.
All right. Brian's iPhone, you can go ahead and ask your question.
Hey, what's up, guys? Just a quick question here. Flow Algo, is that only a paid platform, or is it a free platform as well?
No.
So let's see, like stock charts, I know it's free, but if you want to go ahead and get more indicators or save some of your like the way you trade, I know you can go ahead and pay more for it, but I just essentially just Flow Algo, is it a paid platform or is it free as well?
It's a paid platform.
Oh, okay, cool. All right, yeah, that was my just simple question. I didn't know if it was a paid platform or not.
Okay.
Yeah, thank you though.
No problem.
Yes.
All right, Don Neal, you can go ahead and ask your question.
Hey, can you guys hear me?
Yes.
Yes, we can hear you.
Okay. So quick question on just kind of like your strategy on like a stop loss for options. So I don't know if I just have bad luck, but recently what I'll do is, let's say I buy like a dollar contract. I'll put a stop loss at like a 15%. So like 0.85. And then as soon as it hits like 8.4, it'll sell and then it'll jump to $2. Do you guys have any, I guess, advice or strategies on like, or maybe I'm doing it right and it's just bad luck? What's your take there?
I mean, it's kind of a little bit, it's a little bit of both. Like that has happened to me before, where it hit my stop and then all of a sudden it bounced up. That's why oftentimes they say at least try to give it like 30% as far as like your stop loss, kind of give the stock room to move around. But you're basically doing it right. I mean, sometimes you're just gonna take a loss with it, but oftentimes whenever you get stopped out, you can just find a re-entry and get back in.
And I would say that when it comes to your stop losses, you might want to set a mental stop loss for certain stocks and not do a stop loss on every single one. Now, I'm not giving you obviously, investment advice or telling you what to do. But this is just a recommendation because there is something, and I want everyone to look it up. There's something called stop hunting where institutions actually will cause you to lose out on your position because of stop hunting. So there's a real thing called stop hunting. So let's just say it's a stock that you know that it's extremely volatile. It can go up, it can go down, but you want to stay in that trade. You might want to use a mental stop loss with that particular one. And then another thing is when it comes to your stop losses, you just have to, you may have to manipulate them a little bit based upon the stock that you're in. So it may not be a 15% thing for every single one. But I would just say you have your options of setting a mental stop loss, and then you can actually utilize a real stop loss. But again, even stop losses are not 100% foolproof because it can actually skip over your stop loss as well.
Yeah, and that happens a lot to people in Robinhood. So that's also something to be mindful of.
Yeah, appreciate it.
No problem.
No problem. All right. Jay, you can go ahead and ask your question. Jay, you can go ahead and ask your question if you can hear.
Okay. When you guys were talking, I kind of got into it late, but when you guys were talking about the quad thing, and Kayla made a mention about how she wouldn't trade or how she lost a lot of money. So when that is coming, should you just let your position sit and not do any, not make any trades? Or is that something where you guys were talking about those intellectual institutes that take their money? Should people have a practice of maybe taking money out and then putting back in later, or just not touching it at all and not trading within that time period?
That's an option for you. My recommendation, the time frame of quad witching, I would definitely keep my eyes on that. The worst case scenario, you can exit and you can always re-enter, right? If you have something that's 6 months out, I wouldn't worry so much about those because that's enough time to recover. But if you have something that's expiring literally around quad witching, then you may want to reevaluate those.
Okay, I got you.
Yeah, for me personally, I
thank you.
trade light around quad witching. So as to not run into those type of issues unless it's something far out.
Yeah.
Got you. Okay, thank you.
No problem. Dave, you can go ahead and ask your question.
Yeah, my question was about stocks expiring. I guess that I don't understand that how when a stock gets closer to expiring, you have a better chance of losing. I've been losing like all my money at the end. It's like, it gets down to a penny or a dollar. And I'm thinking the stock's going up, but my option's not going up. And I don't understand that. Thank you.
That's because of your Greeks and you possibly not having a full understanding of Greeks and how it affects your contract, because theta is what is time decay, and that's what's eating at your contract. So the closer you get to expiration, the higher the theta decay gets and starts eating at your contract. And if your delta is not that high, or your gamma, if it's not high enough to cover your theta, then obviously you're going to constantly keep losing, even if the stock is going up a little bit, as well as the Vega implied volatility affects the Vega. So if the implied volatility in a contract is going down and stuff like that, you're also going to lose money because of that. Does that answer your question, Dave?
Yes. And then my last question is, do you have a tutorial on that? I don't really know about all those things you just talked about.
I think, Kay, didn't you just
Dave,
post it
Dama.
in the chat?
Yes, I posted, I did a video on the Greeks, and I posted it in options chat. I also posted it with, he might not be able to see it. So if you just go into options here.
Your
Okay.
mic was cutting out. What did you say?
Oh, I'm so sorry. Okay, so I'll say that again. So I posted it in the, and can you guys hear me now?
Yeah, I can hear you now.
Okay, I posted it in the actual chat within the Zoom, but I also put it in options chat as well. So if you need more information on the Greeks, on indicators, on frequently asked questions, on chart patterns or candlestick patterns, I put that in options chat. And then for future references, it's always going to be in market facts and resources.
All right, cool. I got you that, Tom. Let's see. All right, Nick, you can go ahead and ask your question.
Hi, everyone. Can you all hear me?
Yes.
Okay, great. All right. So I have a couple of questions. I'm actually new to the platform. I just joined like 12, well, probably about 1 o'clock this morning. So I have a couple of questions. First being where I did hear, I believe Kayla, I think that's her name, said that she did post some information. So I want to know, is that more for beginners that is entering the option market and stock market?
Absolutely.
Okay, great. So the second question I have been dibbling and dabbling a little bit in options, but I'm not really clear on my option or my order type. So for instance, a lot of the options that I've been buying, my order type has been limit. And I don't know if that's right. And then also when I sell, a couple of them have been limit. So I
Okay.
just want guidance there on that. Am I doing that correctly?
It really just depends on what you're trying to get out of the market. And I'm happy that you asked this question, and also welcome to the squad since you just joined today.
Thank you.
No problem. So your limit, everyone, your limit, if you just look at the word in itself, your limit is what your limit is to pay for something. And it applies in the stock market. So your limit is basically, this is what I'm willing to pay given where the current price is. It could be a little bit lower than where it's actually trending, but this is where you're negotiating your rate to get into the contract. That's all the limit price is. Your market order is basically whatever it's at currently within the market. So if it's trending at 50 cents in the market and you want to hurry up and get into that contract, you're going to pay 50 cents. But if you say my limit is 35 cents, then you place a limit order and it may or may not fill that order. It has to actually obviously decline in order to pick up your order, which is highly possible. It may happen or it may not if the stock is continuing to run up. But those would be your differences. Your limit is what you want to negotiate. Your market is, I'm ready to get in right now.
So what would be the recommendation? Because I know you can't, I know you can only really get recommendations, and I'm cool with that. What would be your recommendation then for me placing my orders? Like, should it be market, meaning enter in market and then also sell at market? That's go ahead.
Well, my recommendation for you is to always buy low.
Yeah.
And sell high.
Right.
So I'm one that will always negotiate my way into a stock. And a quick tip of what you can do is when you're looking at the daily or you're looking at the chart for that particular stock for that day, see what the low was for the day, see what the high is for the day, and try to negotiate somewhere between that range. But I'm always going to tell you, I'm always going to recommend getting the most for your money, because that way you capitalize on a majority of the run up.
Right.
However, if you've charted a stock and you know it's getting ready to fly, there is a chance that it may not reverse. So you may want to go ahead and execute a market order. You know what I mean?
Right.
You're watching your support levels, you're watching your resistance level, you're seeing where it falls between the two and what side of the fence you want to be on, and then you just decide from there. But I can't give you a clear-cut answer because that's going to be chart specific. It's going to be based upon what you see on the chart.
Okay.
Mhm.
All right. So then my last question, and I don't mean to be taking up too much time, but I have to get these questions answered so I can better understand the process. So the last question is, in terms of gains, what
Mhm.
is good gain? Like, I've been hearing 10%, 20%, 30%. Like, what do you all consider a fair or good gain to get out of a stock or out of an option?
You're just starting with
Yeah.
trading.
Mm-hmm.
And how comfortable are you?
That I'm not honest, if I'm being honest, right? Because
Okay.
it's so many different moving parts to it.
Mhm.
Um, and if I'm being honest, it's quite overwhelming. And I actually was going to ask you if I could just have a sidebar conversation with you, just so I can get a better feel. But I know I have a lot to learn, like my fundamentals and just all of those things. But I have been doing some research and studying on my own. But it's still
Okay.
confusing when you're trying to learn all of this on your own and you don't have a go-to person where you can really get your questions answered to truly
Gotcha.
comprehend, what you're studying, if that makes sense.
Gotcha. Yes. So since you're just now starting, I recommend between this particular range for a reason. I always tell people who are new in the market to take 10 to 20%. And the reason why is because it is so much easier to get a 10 to 20% return in the market than it is to get a 30, 40, 50, upwards of that number, or those numbers. It's easier to get 10 to 20%.
Okay.
And if you can stick to that particular trading diet, eventually you'll see your account start to grow. And as your account starts to grow, so will your risk tolerance, because whereas you may have been someone who's entered the market with $100, now you've taken so many 10% returns, now you can have a 20%, or 30% risk tolerance. You know what I mean? So you just increase it as your account size increases.
Okay, that's fair.
Yeah.
That makes sense.
Yes.
So will this, because I just got in kind of late, will this recording be
It will be recorded. Mhm.
posted? Okay.
Yes.
All right, great. And how can I reach out to you directly, Kayla, if that's okay?
Well, Ray Gents in the Discord, and I'm iCurlyK within the Discord as well. But you'll see us. I guarantee you'll see us everywhere.
Okay.
Okay.
Perfect. All right. Thank you for your time. I appreciate
No
it.
problem. No
Okay.
problem.
Mhm.
All right, Cortez, you can go ahead and ask your question.
Okay, so going back to the quad witching, I get what you were saying about it and how everything drops. Would that ideally be a good time to try to, I guess, quote unquote, catch everything on discount and to buy in for a lot of stocks?
Yes, that's actually a great time. Oh, especially like with doing leaps and stuff. That's usually when people employ their leap strategy is around quad witching if they see a stock or ETF that they like drop. So it is a good time to actually buy. Yeah.
Okay, but that will also be probably a bad time to really start any like new option trading, just because it's going to be super volatile around that time, correct?
Right. Short positions.
Okay.
What we're saying is like, try not to get into short positions, or if you do, try not to go full port. Don't trade with everything that you have on your portfolio. However, this is a good time, as Ray was saying, for you to go into leap. So if you're wanting contracts that are 6 months, a year, 2 years out, you're going to more than likely find those contracts at a discount. So those are the perfect times to buy those, and even shares. You know what I mean? That's the perfect time to buy shares as well.
Okay, thank you.
No problem.
All right. Joshua, you can go ahead and ask your question.
Hi. So when I was learning, I tried to use this strategy to find and to enter stock options where I used the 20 MA, look at all the 200 MA, the RSI and the MACD. But the problem I've seen with the strategy so far is the rate at which it increases, which Kayla sort of mentioned of how quickly the stock will go, because the stocks do eventually go up, but by the time they do, my option would have usually expired by then, and I may or may not have made some gains. I don't know if you consider that strategy good for options at all, and then if you have any sort of advice to gauge the rate at which the stock might actually go up with that.
So what I would say to that is what you were describing were your indicators, right? Your MACD indicators, your moving average indicators, and your RSI.
Yeah.
So I feel like those are some pretty good indicators to work together. But I think what a lot of people are missing is your entries. Your entries are the most important things. Your entries are going to be the difference in why you're profitable or not versus someone else being profitable or not. So if you're missing the run up, it has a lot to do with when you entered your trade. And if you're entering your trade without having some areas of confluence, then that may be the problem that you're running into. So I want you to try to focus on your indicators, all giving you areas of confluence, but you're also looking at your supporting your resistance and seeing where your best entry is going to be, because a lot of that has to do with just entering in at the wrong time.
Yeah, and
I'm sorry.
Yeah, so it was actually after I watched the swing video, when the stock crosses 20 MA, then it will usually climb at that point first for a certain time before it starts dropping back down. So I sort of found that to be okay. If I know that the indicators are telling me that this is a nice entry point, then sometimes I would use that strategy to go for options because I may not be able to afford the stock. But the problem with that is let's say I set an option for like 2 weeks out, and then it takes about 3 weeks or 4 weeks for the stock to actually get to that point. And then by the time my options have expired already, is usually what I run into. So I do have, like, I would say most of the time my entry point is usually good, but then by the time my options expire, the stock isn't moving as quickly as I would have anticipated it to move.
Well, my recommendation is if you feel like your prediction is correct, if you feel like the stock is eventually going to do what you want it to do, then my recommendation is to buy yourself more time. Don't go so short on your expiration dates. Going short on your expiration dates mean that you don't have a lot of time on your side when it comes to the Greeks. You don't have a lot of time on your side when it comes to recovery. So I would recommend just buying yourself more time.
Okay. I'll try that for a while and see.
Okay.
Thanks.
No problem.
Yeah, and that's going to be like the biggest thing with everything is making sure that y'all give yourselves enough time and see which time frame you're looking at to understand your indicators, so that way you can get the right contract and not get anything too short, as well as be mindful of where the stock is. Is it retracing where it's previously been, or is it pushing new highs? And oftentimes when it's pushing new highs, it's either going to take a long time to go higher, or it's definitely going to pull back because it's basically at a resistance point. So always be mindful of where the stock is, because if it's pushing new highs, I mean, it's never been anywhere else before. So you don't know how long it's going to take to keep going up, as well as if it's going to come down. And usually they always come back down and consolidate for a little bit. But Ken Dowland, you can go ahead and ask your question. I'll pronounce your name right.
Hello, can you hear me?
Yes, I can hear you.
So I had a question about stop losses. So when you're in your contract expiration, and let's say a contract expiration date is a month or a month and a half out, and let's say this you reach your stop loss within the first couple of days, what should I look at to determine if staying in the contract is worth it to swing back potentially in my favor, or if it's just best to cut my losses and then re-enter into the contract at a later date? Like try to look at the 4-hour chart, are there indicators that'll give me more information to determine if it's best to just cut my losses with it or to just stay in it?
With that, I would say you would need to relook at your indicator, relook at the chart and see what it's doing. Has it actually changed, like your confluence on getting in the trade? Did any of that change, or was it just like news? Basically, usually it's news pulling it back, or maybe something in the company happened that's pulling it back, or the overall market is being pulled back. So I would look at that. And if you still think it's going to go up, then go ahead and stay in the trade. But if it has completely reversed on the reason why you got into the trade, then that would be why you need to go ahead and get out. And then you can come back to the trade and readdress a new entry on trying to get back into that same stock.
Okay. Thank you.
No problem. Ali, Khalid, you can go ahead and ask your question. Hope I pronounced it.
How you doing? So, I just want to say I've been in Westcott for like a couple months now, to be honest. And so I'm only 17, right? And the only account right now I have is Robinhood, because I'm not old enough to put in other accounts like Webull, because it needs my ID and stuff. So, do you like, for options, what do you recommend? Like, what do you recommend is the best strategy to find like option plays? And because I do have Chris's Wealth Squad and Whiteboard Magic and stuff, but I believe like that's mostly for stocks and stuff like that. So what do you recommend is like the best strategies and how to find options? And like, and in the Greeks, I know all that already. I know most of it, not all. And I know all of that. And like, I was able to grow my account from like $300 to like 25,000 in a matter of a month. You know,
Okay,
so
that's really
but
good.
at the same time, because of like losses and stuff, I did lose all of it because of my risk tolerance and not knowing to pull back and stuff, pull out and stuff. So
Okay.
like, what is your recommendation for how to find the best option plays and risk management?
First of all, congratulations. I'm so happy that you're starting so young, because oh my God, that's an amazing thing to start at 17 years old. So you're definitely going to be a beast by the time you're my age, I'm sure. But what I would say, no problem. What I would say in regards to your strategy, and I'm sure Ray could attest to this too, you have to figure out what works for you. So you have to start trading with paper money. Although you've already made some money in the market, trade with paper money and figure out what indicators you like that work together. Because I can't give you a strategy that will work for you, because there's so many out there. And trust me, I've tried quite a few of them and I finally narrowed down what works for me. But I would just say start to, maybe take some courses and see what you like in reference to the indicators that you use. You're in Robinhood, so, and you can't go into any other platforms, but I'm just so blown away by the fact that you started so young. And that would be the best advice that I could give you, is to paper trade with fake money, find out what works for you, and then just proceed from there.
I appreciate it. I mean, I have been learning. Like, I haven't been trading a lot, but I have been learning for like the past year now. So I started earlier last year, and I've been like, indicator wise, like, I think I know I got most of it down, but I'm just kind of confused on how to like find the best option plays. like that. Like for stocks and stuff, and swing trades, like I think I got most of it down. But what confused me the most is how like what's the best way to know if an option is good or not? You know what I mean?
Yeah, so that's all going to come with learning the indicators and learning what strategy works for you.
Okay.
Me and Ray, myself and Ray, there's a gentleman on YouTube. His name is In the Money. And I feel like he's a great place to start to help you to understand the indicators more and to get your feet wet. I would refer you there. That would be a very great place for you to start.
All right. Most definitely, I'm gonna check it out right now. You said his name was In the Money.
In the Money, yes.
All right, perfect. Thank you.
He's a great resource. No problem. Congratulations as well. That is mind blowing. Okay.
Thank you.
So who's next?
Oh, well, I was just gonna say, and the other thing is you can because me and Kayla both use TradingView, and I don't know which paid subscription gives you the paid subscription on TradingView that gives you the ability to back test, like where you can scroll way back on a chart and you can delete everything in front of it, and then you can like back test the indicator that way and just work on understanding price movement and everything like that.
Yeah,
I know TradingView offers that, and I think Thinkorswim has something similar. But
do you mean like indicator wise?
Yes.
Yeah, like
what you find? Yeah, I mean I do use Webull, but I don't have an account there. Like I only use Robinhood to buy stuff. Like on Webull, my indicators are for the daily chart, I use 250 most of the time. RSI, MACD, and the 20 and the 8 exponential moving averages. That's what I use.
Yeah, those are good. Those are really good. Yeah, but with TradingView, you can actually test those out more and just see like how they work, and also like I said, go back on the chart, like go back maybe like a year, delete everything in front of it, and then press play, and then just work on using the indicator that way as well as understanding price movement.
Yeah.
Oh, I see what you mean. All right, thank you.
No problem.
All right, Jaleel, you can go ahead and ask your question. Jaleel Akram. I think I said.
Yeah, can you hear me?
Yeah, I can.
Yes.
My question is, when trying to, I was trying to sell a contract last week. I was up, I think, like 20%, and I tried to sell it, but the spread, it was a wide spread. I think it was like 50 cent to 150, just for example. When I'm trying to sell and it's a wide spread like that, do I want to put in like a sell price, like midway? What would you recommend for that?
That's usually like what I do. I put it in the middle, midway. And if I'm really trying to hurry up and get off of it, I slowly start decreasing that number.
Yeah, so, and the only thing about that is like with Robinhood, I was doing it on Robinhood. And with Robinhood, it'll send you the message like if it doesn't sell by 4 o'clock, do I cancel it and try to resell it?
Yeah. If your order didn't go through, that's because nobody is interested in picking that particular contract up at the price that you're trying to sell it for. But what I would recommend, if it's not a trade, wide spreads are not that bad if you're thinking a year or two down the line. But a spread that's like a 50 cent between $1.50, for me, I wouldn't enter those types of contracts. I'm trying to see my bid and my ask not too far apart based upon what particular stock I'm looking at. Obviously, if it was something like Tesla, you might see a pretty wide range. That's only because Tesla can move a lot. But if you're looking at just a regular type of stock, I wouldn't take something that has that wide of a range to begin with, unless it's something that's like a few years away and there's enough volume and open interest on that contract. So that your starting point may be the problem. You may not want to enter something that with a wide spread like that.
And it was a Merck contract, and I was like, it was about a month and a half out. So, and I was just trying to get out and take the profit. So.
Gotcha.
Yeah.
Thank you.
No problem.
All right. And I guess it's the last question. Dave, you can go ahead and ask your question.
Yeah, what is the preferred platform that the Wild Squad recommends in trading options as a recommendation?
Kay uses Webull and I use Thinkorswim. So those like the two we always gonna recommend and throw out there.
Yeah.
Okay.
Okay,
Right,
so
the-
I wanted to
mhm.
answer this question about averaging down. Now, inside of Market Facts and Resources, I put a pretty good resource on averaging down on your contracts, but I saw in the community a lot this week, and it was like a running joke where people was like, I averaged down, but it kept averaging down on me, or it kept going down. So do I continue to average down? The same way you use the chart to get in, you use the chart to get out. So you may want to look and see, is it still falling? Because if it is, you're essentially averaging down for no reason. But averaging down is going to change your cost basis. If you're averaging down, it's a really good thing because it can actually change your cost basis for you, but you definitely don't want to average down without actually looking at the charts.
All right. Did you mean to? Okay, did you mean to mute yourself?
I did.
Okay, because that just was like random. All right. Does anybody have any more questions? Because if not, we're gonna go ahead and do our hard stop. It's been an hour. That's usually the allotted time that we have. So yeah. Oh, Cole, you can go ahead and ask your question, and then this will be the last one.
Okay. Kayla, you had said something earlier when you were talking about doing calls and resistances. Doing calls and puts. But you were talking so fast, I didn't catch what you were saying. You were saying to do puts close to the resistance and doing calls close to support or something along that line. Could you just repeat?
Yes. So if you're thinking about your calls, you're thinking about the price going up. So your support levels is going to be essentially the floor, right? So if you're buying something at the floor, just think about it hitting the ceiling. Your ceiling is going to be your resistance. So if someone is doing puts, they want obviously the price to go down, right? So you're going to go down from the ceiling. That's the easiest way that I can break it down so that you can get a visual understanding of when to enter and exit your trades. But your support levels is where you ideally want to enter for calls. Your resistance level is ideally where you want to enter for puts.
Okay, thank you.
Yes, no problem.
No problem. All right. Thank y'all for coming and tuning in. Like I said, this will be recorded. This will be posted probably later today, or if not, early tomorrow. So we'll go ahead and catch y'all in the next class. Thank you for tuning in. Hope y'all learned something. And we'll catch you next time. Catch you in the chat.
Bye, everybody. Have a good day. See y'all tomorrow on the trading floor.